Alright, we had another fun week in the markets today. There was elections, the Fed meeting. So here's a little update for those that missed out on what happened. This week, the US stock market, the S&P 500 closed up higher for the week. So that's always good. It's recovering some of the losses that were made in late October. Midterm elections help remove some uncertainty over government policies for investors. Now, usually the markets do better with kind of this Republican Democrat mix in either the House or the Senate, because they tend to avoid more radical government policies which might shift extremely to one side or the other. Now, however, the market did close red on Friday after the Federal Reserve kept interest rates steady. Many expect a rate hike in December this year and probably 3 or 4 more going into 2019. So we see that the US Federal Reserve is aggressively rate hiking interest rates, which make lending money more favorable and borrowing money more costly. Emerging markets such as China and Malaysia would feel the burn of the recent rate hikes because these countries mostly have debt denominated in US dollars, so it makes it more expensive to pay off using their own domestic currency. Moving forward in the short term, I expect, let's see here, US markets continue upward momentum since they already formed like kind of a small trend line going upwards since this past few days, but that might change depending on what happens with the US-China trade discussions. President Trump is set to meet President Xi Jinping later this month in the G20 summit in Buenos Aires. I hope I didn't butcher that name. In Argentina. So they're supposed to meet in Argentina. I'll follow closely then and see what happens. Oil entered bear market territory as it dropped more than 20% from its recent high. So, oil exporting countries such as Malaysia are surely to be affected. That's the drop in price is mainly due to abundance of supply in the market and lack of demand going forward due to a slowdown in the whole global economy. Long-term investors should do what you do all the time, just dollar cost average your way into the portfolios. That means investing a fixed amount every quarter or every month. Short-term traders should prepare for any change in trend on Monday. If not, ride out the bull. And intermediate speculators should do nothing until the market makes up its mind or hit one of your indicators. On other note, Sunday was Singles Day in China, so Alibaba have another record day. I think, right, let me just, Singles Day, yeah, Singles Day sales. I think the sales was some 30 billion, yeah, 30 billion, nice. 30 billion US dollars for single day sales for Alibaba. And last year I think it was 25 billion, so they're doing kind of good right now. Depending on moving forward, I think this might be an attractive buy. Anyways, so as usual, if you guys have any questions, feel free to ask me. I would try my best to answer them. And moving forward, if you'd like to see anything in particular, any info that you'd like me to talk about more in particular, just reach out to me. As usual, thanks for watching.